So this is an extremely important video because in this video, I am going to discuss with you a particular technical criteria that I use to determine whether the base that I'm looking at, whether it is valid or invalid. Let me repeat that. I'm going to discuss with you a particular technical criteria that I use to determine whether the base that I'm looking at within the stage 2 uptrend, whether that base is valid or invalid. Okay. So for that, I will use the example of a company called Affle, AFFLE. Okay. Let's have a look at that. And by the way, before we look at the company, you must have heard me say that I do my comparative analysis, technical analysis, fundamental analysis, market analysis, and liquidity analysis. I do all of this for a stock in less than 10 seconds. Okay. Now you might say, Rohit, I mean, how is that possible? How can you do five kinds of analysis in less than 10 seconds? Well, the reason is very simple. You just need one or two reasons to reject a stock. So, for example, if you read Mark Minervini's book, in that book, it is clearly written that no matter how great a company is fundamentally, if it does not provide you a proper technical setup, you don't even look at the stock. Okay. So if you are looking at the technicals of the company and you don't see what you want to see on the chart, what is the need to do comparative analysis? What is the need to do market analysis? What is the need to do fundamental analysis? Okay. So for every stock, you don't need to do all these five kinds of analysis. When you are looking at stocks, look at stocks with the intention of rejecting them. Don't look at stocks with the intention of selecting them. Okay. Eventually, as you reject 100 stocks, you will find one stock which is worth your time. You will find one stock where you really need to do comparative, technical, fundamental, market analysis, and liquidity analysis. When you find yourself spending time on a particular stock, probably that is a stock that deserves your time. Okay. But if you just see one or two reasons here and there, and it's those reasons are good enough for you to reject the stock, there is no need to do even fundamental analysis on the stock. Okay. Let's try to understand this with an example. So let's look at Affle. Today is 7th of January. So for the next day, that is 8th of January, Wednesday, I have not put Affle on my buy alert list. I'm rejecting the stock. And to do that, I don't want to take you to MarketSmith. The technical setup itself will help me to reject stocks. Okay. Now have a look at this base. The price is above the 50-day, the 50 days above the 150-day, the 150 days above the 200-day simple moving average. And if I draw the base looks like this. Okay, very simple. Now that's not the point. It's not the base that is important. I will show you what is important. In the base, I tried to see whether there is a falling window or not. If there is a falling window inside the base, or if there is a downside gap inside the base, and if that gap is not being closed, or if the window has not been broken, I outright reject that base. Okay, because it's not worth my time. Because a falling window tends to become resistance. So if you look at these two candles, between this candle and this candle, there is a falling window. So every falling window has got an upper line and a lower line. So let us draw that. So between these two candles, what is the upper line? The upper line is the low of this candle, which is 1805. So let's draw a line there. 1805. Let us give it blue color. Okay. Next, what is the lower line of the falling window? That's the high of this candle, which is 1797.30. So 1797.30. Okay. So if you see, now you can clearly see the falling window, right? See, between these two candles, there is a falling window which I have drawn with a blue line. Okay. Now, if you notice, show me one candle after this green candle. Show me one candle that has broken that falling window. Show me one candle that has broken that downside gap. There is not a single candle. Broken means the upper blue line needs to be broken, which means the stock needs to close above that upper blue line. So remember what I said earlier when the video started. I'm going to share with you a technical criteria which allows me to determine whether the stock is valid, whether the base is valid or invalid within the stage 2 confirmed uptrend of the stock. Now, this stock is in a stage 2 confirmed uptrend, but the base is invalid. Why? Because of the falling window. Okay, that falling window has not been broken. See, that falling window has become resistance for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. For 12 days, that falling window is acting as resistance. Okay, so you can understand the power of a falling window. So, unless that window breaks, unless a candle closes above this upper blue line, okay, I want it to close above that entire window. Unless the price closes above this upper blue line, which is 1805, the price should close above 1805. Even if it is 1805.10, that is fine. It means the window is broken. Okay. Unless that happens, I'm not even looking at this stock. I'm not interested in comparative analysis. I'm not interested in fundamental analysis. I'm not interested in doing liquidity analysis or market analysis. This one reason is more than enough for me to reject the stock. See, some criteria are non-negotiable. The falling window criteria is non-negotiable because falling window tends to become resistance, and in a stage 2 stock you normally don't expect a falling window. You should expect a rising window. So this stock is doing something which we do not expect it to do. Okay, and that's a dangerous stock. Okay, that is why in this video I have not taken you to market smith. Okay, because on the trading view, on the chart itself, I can reject that stock. I don't need to spend another fraction of a second on this stock. So when I'm making a video, I'm taking the time to explain to you the reason behind I reject the falling window. But when I'm doing this practically in my daily routine, I am not even spending 1 second on this stock. Forget about 10 seconds. Forget about 5 seconds. I'm not even spending 1 or 2 seconds on this stock. The moment I see the falling window, the moment I see that not a single candle has closed that falling window, I'm out. I will wait. I will wait till the stock closes above the falling window. Then I will consider. Then we'll do comparative analysis, fundamental analysis, and things like that. But as of now, I'm not interested. Now, you might say, Rohit, what is the big deal with the falling window? I mean, why are you so worried about the falling window? Okay, let me give you a practical example. Let me answer your question. Okay, so that you will be satisfied, your brain will be satisfied. Okay, have a look at this stock. See, when I give you proof, you will understand the importance of what I'm saying. Okay, so I will give you proof here. Have a look at this stock. I will hide some data here. Let me adjust the, yeah. Yeah, have a look at this base. This is a stage 2 stock. Assume that you're looking at this chart. Okay, this is a stage 2 nice confirmed uptrending stock, correct? Okay, so if I draw the base, this is how the base looks like. Now the buy point is the high of this candle, correct? Wait, look at this. Look at these two candles. Is there a falling window there? Is there a falling window there? Yes. Has that window been broken? No. What is the upper line of the falling window? That's the low of this candle, which is 306.80. So let's draw that 306.80. What is the lower line of the falling window? That's the high of this candle, which is 305.90. So 305.90. So now you see between 305.90 and 306.80 here, there is a gap, there is a downside gap, there is a falling window. Okay, falling window could become resistance. So I just outright reject the stock. Look what happens the next day. See, squat candle. Squat means weak closing. The price tends to go up. It tries to break that falling window, but fails to break that falling window, fails to close above the falling window. A failure to close above the falling window is an extremely dangerous sign. Okay, you should stay as far away from that stock as possible. So let me mark that for you. So if you look at this, this is where that squat happened. right? So the stock failed to close above that falling window, right? The stock failed to close that falling window. And look what is the consequence. If you do not reject the stock here, if you end up buying the stock here, look what happens. See, have a look at this. This is the candle that I marked for you. Okay. This quad candle. After that, look at the price. Look what has happened. It's a complete disaster. The price has gone in this range. The price was 305, 306. Now it is 213. What's the loss from here? From here, which is the buy point, this is the high of this candle till here. What's the, let's take till the low. It's a 32% decline. Okay, in how many months? From July to December. So let's say 6 months. In 6 months, the stock has given minus 33% return. Okay, is that impressive? Not at all. Okay, so now you understand why I am so afraid or so cautious about the falling window. Can this happen with Apple? Of course, it can happen. I don't know. See, it could happen, it could not happen. I don't know. But based on my past experience, based on my understanding of candlesticks, based on my understanding of falling window, I am rejecting Apple, okay, because there is a falling window. So in this video, I have taught you a technical criteria which you can use specifically to determine whether the base that you are looking at within the confirmed stage 2 uptrend, whether that base is valid or not valid. If you are looking at a base with a falling window, that's an invalid base. Just outright reject the stock. If you don't reject it, I am not saying that it cannot go up. Of course, it can go up, but the probability of it going up is very low. That is what I wanted to convey through this video. Thank you so much.